Good afternoon, everyone. I'm Florence from the Institute of Banking and Finance, and we're delighted that you're able to join us this afternoon for our IBF Masterclass jointly organized with Alibaba Cloud, where we'll look at the developments in e-payments. We're glad to have Gautam Devleka, angel investor and founder of various startups here with us to share his insights on the growth of the mobile payments industry, what has contributed to its success, and what are some of the challenges the industry has to overcome. He will also touch on some of the risks, security, and regulatory considerations. But before I invite Gautam to share his insights, for those of you who may be unfamiliar with the IBF, allow me to do a very brief intro on the IBF and the resources we have to help professionals in the financial industry. The IBF was established by the MAS in 1974 as a training provider to provide functional training for the financial industry. Since then, our role has evolved into one of standard setting for financial services sector skills and competencies. Since August 2018, we also expanded our mandate to cover career advisory and job matching functions for the financial services sector. We thus adopt an integrated approach to skills development and jobs for the financial services sector. Here's a quick look at our services and how we support the industry across training, recruitment, and workforce transformation. You can find out more about our services and connect with us on any of these areas via our website. Some of you may also be aware that we have put in place enhanced training support for the financial industry to further alleviate training costs during this period. The enhanced course fee subsidies are part of MAS's support package that was announced in April to sustain and strengthen capabilities in the single financial services and fintech sectors amid the current economic downturn. The aim of the enhanced training support is to encourage more companies to send their employees for training and upskilling so that they're in a better position to help the company move forward when economic activity normalizes. For the rest of the year, we have raised funding support for training to 95% across the board for all FTS and IBF STS programs, subject to prevailing grant caps. The funding quantum will be reduced to 90% next year before going back down to pre-crisis levels in 2022. You can find out more details on the enhanced training support on our website. Apart from the increase in course fee subsidies, training allowance of $10 per hour for self-sponsored trainees and $15 per hour for company-sponsored trainees will also be given for training undertaken this year. You can find the list of eligible training programs on the IBF Program Finder on our website. In addition, the IBF will also be supplementing the commercial training available with free webinars like this one during this period to support the training needs of the industry. Financial professionals can also tap on the Learn at IBF mobile learning app for bite-sized learning at your own leisure. All these complimentary training are accorded with non-core CPD hours. And with that, I conclude my short intro. I'll now hand the time over to Gautam.
Thanks, Florence. Good afternoon, ladies and gentlemen. I hope you can hear me clearly. My name is Gautam. Let me also share my screen so it is. All right. I hope you can see my screen as well. So thank you for joining in on this masterclass. First up, I would like to thank IBF and Alibaba for giving me this opportunity. My name is Gautam, and I have founded a few startups in my life, juggling time between my corporate world as well. I started my career as a financial sell-side broker with ICAP in India, and then I moved to Singapore. I used to work for Merrill Lynch, and my last role was with Amazon Web Services, leading their partnership team for the professional services across APJ, right? What we're going to do today is we have 4 sections that we would cover. We will start with the history of cash and payments itself and how we arrived at where we are today. We will do a deep dive into Alipay and WeChat Pay, 2 of the most popular digital payments providers in this region. We will also talk about mini programs. Apps, the word apps has been copyrighted by Apple. So there was a dispute over the use of that word. So we call them mini programs. And we will also talk about the pros and cons of a cashless society. What are the benefits? What are the risks? What are the issues that we would perceive in a cashless society, right? But before we kick off, um, I've done a lot of physical presentations. Uh, I can see there are more than 150 people of you signed up, but this is possibly a classic case of being lonely in a large crowd. It's it's a good thing for me to kind of pull up people from the front row who are nodding off uh, and ask them questions. So, but I'm trying to go and keep this interactive here as well. What I would like you to do is, if you could just scan that QR code on your screen and log into the Slido app, you should be able to see a screen that looks like the phone screenshot that I've put out there, right? So there are two tabs, basically one for question and answers and one for polls. We'll come to the polls in a while. The question and answer tabs is where you can keep sending in your questions at any point of time during the presentation. Just keep asking there, and if you feel that somebody else has asked your question, or if you like somebody else's question, you can also vote for me to answer that question or bring that question up to the top, right? Let's see if we can kind of do an icebreaker here using this so we can all get comfortable with that. We will be using this throughout the presentation. I do have a few quizzes. I do have a few polls that I have during the session as well. So if you can log in and just leave it there in the background, it's not going to take up too much of your battery or your memory. Just leave it there once you've kind of scanned the QR code, right? So let's do a small icebreaker with this. Now, we all know this year has been a bad year for us. We all want to travel. We love to travel. Where is it that you would like to travel first when all this is over? Which country or city, right? All right. There are some interesting answers coming up there. The first one, interestingly, was SG. I wonder who wanted to travel to SG. Okay, Japan is still leading at this point. I guess even I want to go eat some sushi there. Malaysia. I would assume some of them are golfers who want to go to Johor and play. That is interesting. So Japan is still leading after about half of you voted. Um, I think we kind of slowing down on the vote. So let me go ahead and so at least you've got an idea of how to use this or what to do with the app. Um, let's move on, right? Now, the questions that you ask will be displayed here. I do have the slide in a few places in my presentation. So please go ahead and ask your questions if you have any, or vote for other people's question if you would like, right? All right, so let's get into the agenda. The history of cash. Now, where do you think we were first cashless? When do you think we were first cashless? Again, going back to the app, if you could just quickly give in your answers there. That's interesting. Okay. All right. Some more votes coming in. Sorry. Let me just give them a chance. Okay. So again, it's interesting. A lot of you think 6000 BC was where we went cashless first. You're in a way right, right? What is the definition of a cashless economy? It is a term that is used to describe the situation wherein the flow of cash doesn't exist. Take a moment to understand that, right? So you are looking at you're looking at cash that is not existing in the economy. When I pay la to you, those are just numbers that are changing in both of our apps, right? One goes down and one goes up. We assume that the app agrees to agrees that those numbers represent the value of money as we know it, and at demand is you get paid for it, right? So in effect, banking system itself is in mutual debt. The money that you place in the bank or deposit in the bank really doesn't belong to you at that point, right? It is a loan that you've given to the bank, and the bank promises to pay you when you demand it back, right? Now, which is why banks always fear a run on them. The millennial definition, I'm assuming a lot of you here would agree with that. My 15-year-old son agrees with that as well. Paying with cash is like writing a notice on a public board instead of snapping it on Snapchat. Uh, Today, digital payments are so prevalent that it feels odd to pay with cash. You've seen that famous Visa ad where the entire line kind of stops when somebody is trying to juggle with coins. It is reality today, right? So when you go into a shop, you basically using contactless payments. Now, if you look at the timeline of the cash as such, you're right. I mean, so we look at 6000 BC when people started using or exchanging goods for what they did not need and get what they wanted, right? Over time, these products, that's the barter system for you, right? And over time, some of these products became valuable. Salt at one point in time was very valuable, that Roman soldiers used to get paid in salt. The fun fact, your term salary comes from the Latin word sal, right? So that's how valuable it was. By 1500 BC, metal was discovered and was started. So when people started exchanging goods, the concept of value to each goods came into play, and they needed a third party uh, or a neutral product to kind of assign value to each of these exchanges. With metal being discovered around 1500 BC, you started having bronze, silver, and gold, which were being exchanged in value of other goods. And then they were later made into coins. And that's how you had the first bits of coins or cash come into play, right? By 1000 AD, the Chinese had invented paper, and paper money was in existence in China. Marco Polo, on one of his visits to China, brought back paper money, and he kind of introduced paper money to the Western world. As we move on, in 15th century, checks were typically in commonplace, right? So they were typically IOU notes because people didn't want to carry bags and bags of coins. So they started issuing notes to other people that became the earliest specimens of checks. Now, the earliest specimen of handwritten check in existence was drawn on Messrs. Morris and Clayton, based in London, for an amount of £400. And as time grew, by 1770, daily clearing was in place, bringing a formal start to the banking system as we know today. Clerks from five banks would sit at the Five Bells Tavern and settle the checks at the end of the day. And that's how the whole clearing system came into play, right? The 19th century was all about telegraphic transfers. We had telegraphic machines that could translate words into signals and into words back at the other end, and they were kind of used to deliver cash from one place to another. By 1877, almost $2.5 million was transacted through this telegraphic network. Now, with the 20th century or the beginning of 20th century, plastic cards came into existence. Credit cards, as we know them, have been existing for a long time, even before than what we think, right? The first card was issued in 1914 by Western Union. These were basically check guarantee cards because, again, anybody could handwrite a check. There was really no way to determine whether the check was genuine or not. So banks started issuing cards to patrons with an embossed number and a code that would be imprinted on the paper that the check was written on. So that's how these cards came into play. Now, fast forward to the end of 19th or 20th century, 1994 is when Stanford Capital started to offer online transactions. With the advent of internet, online transactions became a hit. By 2000, PayPal was formed. And by 2017, PayPal had transacted about $7.6 billion worth of payments. In 2007, Western Union tied up with GSMA to carry out the first mobile payment. And in the last 3 years, since 2014, the explosion, 2017, the explosion has been amazing, right? So you now have contactless cards, mobile wallets on your phones, wearables, cryptocurrencies, so much so that you have a store, the Amazon Go store, where you don't need any of these to shop. You walk in and walk out with whatever you want, and your app detects and deducts the payment for the products that you purchased. And now, as of last week, PayPal has embraced Bitcoin, right? Now, all this, if you look at it, the question then is, are we already in a cashless society, right? Cashless future or cashless present? That's possibly the questions that we need to look at. Now let's do another quiz, right? If you can go into your app and answer that question. So 96% of this transactions in this country happens via cashless methods. Can you name the country? Is it China? Is it South Korea, United States, or Zimbabwe? Let's see what the answers are, right? Now, 93% of you have said China. Nobody has said United States. That is correct. But it's interesting that the 3% who said Zimbabwe are actually correct. So Zimbabwe, 96% of their transactions happen via cashless methods, right? it's interesting because, all right, AB123 is the one who got that right. So let's take the case of two contrasting countries, Sweden and Zimbabwe. Both of them are highly cashless societies, right? But they have their own reasons for it. Like I said, Zimbabwe, right? 96% of Zimbabwe's transactions are done over phone as of 2019. EcoCash, a mobile payment provider, is king there, right? They practically run all the transactions that happen in the country. Now, the reason for this is slightly different from why Sweden took to cashless society, being a cashless society, right? So in the late 90s and early 2000s, the then President Mugabe set into motion a forced confiscation of white-owned commercial farms. The economy tanked because of that, because there was nobody to run those farms, right? And by late 2018, inflation was at an all-time high, uh, and a carton of milk could retail into trillions of dollars, right? So when inflation hit 79.6 billion percent, Zimbabwe said no more cash, right? So they swapped out their entire economy to US dollars, euros, and British pounds. They used to run their country with borrowed currency. Econet, a mobile provider, set up EcoCash, which was a mobile payment system. And as the notes ran out, EcoCash became a default method of payment or exchanging money with the Zimbabweans, right? It was a hero initially because it provided an opportunity or a way to run the economy, to get people to buy and sell things. But then they started hiring middlemen or agents to kind of drive uptake for their platform, or for the payment platform. And those agents started charging very high transaction fees, right? Sometimes the transaction fees could go up to 40-50% of the amounts. So today, if you actually go to Zimbabwe, every seller has three different price points, right? One in the US dollar, which is the cheapest, and one in a government bond note, which was issued sometime in 2014, which is marginally higher than the US dollar rate, and then the EcoCash rate, which is the highest, because they had to pay the transaction fees of almost 40-50% per transaction, right? So Zimbabwe became a cashless or a contactless society because of a necessity, right? They just ran out of bills, they ran out of cash, and hence they had to find an alternative uh, avenue to continue with their selling and purchasing. Sweden, on the other hand, has consciously taken a decision to go cashless by 2023. That's their goal, right? And they're well on target there. Uh, as of 2019, start of 2019, only 1% of Sweden's GDP is circulating in cash. Compare that to 11% in the Euro, 8% in the United States, and 4% in Britain, right? If you go to Stockholm today, every shop and every seller has signs declaring themselves as cash-free zones. Not many people deal with cash. In fact, Sweden has stopped printing currency as of 2013, sorry, 2015 and 2016. But they also have put on hold the entire stoppage of printing currency, because there is still a certain population which is slightly old, slightly rural, who still don't have the ability or the attitude to deal with mobile payments. So there was a bill passed in the end of 2019 in Sweden where they said cash will still be available to those who need it, right? Now, we've seen how cash was developed and how payment methods came about, um, and how these two countries have kind of adopted mobile payments for contrasting reasons, right? We will now go into the next section, which is basically the digital payments. But just before we go in, remember, contactless is not equal to cashless. Like the 67% who said 6000 BC was where we were really cashless, that is true. I mean, cashless is a barter system, right? The true cashless society was where there was no third element to determine the value of a product. For a really thirsty person in 6000 BC, an acre of land could have been worthless, right? So understand that we're talking of two distinct things here. One is the concept of having a standard, independent, universally accepted notion or basis that determines the value of an object, right? The second is the physical and visual form that we've given to this concept, whether it be paper notes or metal coins. That's the physical and the physical form that we've given to this concept. Now, when we say cashless future, will we be able to get rid of that concept itself? Maybe, maybe not. There are some websites that are dedicated to the barter system concept, right? Will they grow in size? Will they take over the world? Your guess is as good as mine. But what we are definitely looking at is this world is going through a rapid acceleration towards contactless payments, right? The underlying cash is still there, but the method of paying is going digital for sure. In the next section, we're going to discuss what two of the biggest mobile payment providers and digital wallet providers, Alipay and WeChat Pay, are so successful, right? Before that, let me just quickly check if there are any question and answers. Okay, we still don't have any questions. Uh, Please do submit your questions as and when you can, right? Don't feel shy. All right. Now, going into the next section where we talk about Alibaba and Tencent, who are the owners of Alipay and WeChat Pay. They kind of really rule the market in China. 93% of mobile payment transactions happen on either Alipay or WeChat Pay together, right? The total market size is $117.5 trillion dollars estimated at the end of this year. Now, take a moment to look at those numbers, right? It's just huge. And of this, if you look at some more numbers, so you look at Alipay, Alipay takes about 55% of the market. And the 10Pay, which is basically WeChat Pay and QQ Wallet, is about 39%, right? The number of unique mobile payment users in China is about 800 million, right? Which is almost 86% of the population. Now, if you compare that with the rest of Asia, Singapore is somewhere at 46% as of 2019. Thailand is at 67, Hong Kong is at 64. But China has just gone way past ahead the rest of the world in the mobile payment space. And particularly because of these two companies, Alipay and WeChat Pay. What is it that makes them so successful that they have these staggering numbers, right? So if you look at a bit, if you go back a bit in time, 2014 would be ground zero for mobile payments, right? That is the year when um, WeChat Pay came into existence. That is also the year when Google Pay and Apple Pay were introduced in the US. The Chinese government in that year liberalized the banking system or banking rules and gave banking licenses to Alibaba and Tencent. Now, it was a big, bold move to give tech providers banking licenses, but there was a bit of background to it. The previous 2, 3 years, the Chinese government has had given a mandate to the state-run banks to get rural and old Chinese population into the financial system. So there was a huge financial inclusion mandate, which was to bring everybody under the financial umbrella. Everybody had to have a bank account. So that was the mandate, right? Unfortunately, the state-run banks had given up on their mandate because the country was so vast and huge that it just didn't make financial sense to set up branches in far-flung areas, staff them, have ATMs, move cash from those areas to the center. It just didn't make sense to set up an entire system, right? Which is where the Chinese government said, okay, let's look at the tech providers because they, by that time, through Taobao and Alibaba.com, had been engaging with these folks through phone. They have been selling products to them. They've been delivering products to them. So they had the capability to reach to these rural folks who are out there. I mean, they had that in them. So they took a gamble and they said, let's give these two banking licenses and let's see where it takes us, right? And the rest, as they say, is history. Now, one thing to be noted here, I mean, I know we all have a kind of different perception on the Chinese government in terms of how they propagate news or get people to do stuff. It has to be noted here that not once did the Chinese government issue a statement or notice to the general public to use Alipay or WeChat Pay. There was no government mandate to use these, and there were no subsidies given to these two companies, Alibaba and Tencent, to promote the digital payment method. The only thing they got was the banking license, which was out of the ordinary, right? If you look at it, the rest of it was all because of what these two companies did. Now, take a look at these two charts, right? So the payment methods in the US, if you look at it, credit card is still king. This is slightly dated. I mean, this is about 2018, end of 2018 data, but not much has changed, right? So credit card was still king. There was a huge plastic revolution in the US that, unfortunately or fortunately, China and India missed, right? So our credit card, the time we spent, uh, time China and Indian population spent on credit cards was pretty low. With the demonetization exercise in 2018, India kind of leapfrogged the plastic era into the digital payments. Paytm is a big player in India, right? In China as well, somehow the culture just didn't take up to plastic. They preferred cash, but when the phone came in, they just adopted it like they say fish to a water, right? So if you look at the payment methods in China, you're looking at WeChat Pay and Alipay, which is right on top, and then the third is cash, right? So if it's not phone payment, it's cash. The credit cards and all the other plastic come much later, right? Um, Now it's odd because US now okay, let's look at the mobile payment adoption in each of these selected countries, right? So if you look at China and India, 1 in 3 people use mobile payments to pay their purchases, to pay for their purchases. US is at a dimensional, I mean, it's at a very low percentage of 8%, right? Um, it's kind of remarkable that even though 81% of the US population has a smartphone, the numbers on the mobile payment adoption is not even comparable to China or India, right? Again, like I said, the reason for this is US is so entrenched into the plastic card ecosystem that it's finding itself difficult to free itself from, right? So the entire ecosystem has been built, creating that credit card ecosystem, point of sale machines, the plastic chips, the magnetic swipe cards, everything that you require for those to function has been in place and they've been functioning well. They just don't seem the need to move to a new one. So that, uh, again, like I said, in India, the demonetization exercise in 2018 kind of leapfrogged the entire nation into adopting Paytm as a de facto payment provider. All right. So, having had a look at those numbers, what is it that makes these guys really so successful, right? Uh, to me, from what I see, there are basically four factors that I think contribute to this success, right? And both these companies, however fierce competitors they are underlying, these four factors are the underlying success for both companies, right? Now, let's look at the first one, which is the ideology. Now, this was a post on LinkedIn when Alipay kind of came into existence, right? When Alibaba Financial Group was formed. It says very clearly payment is not the end game, but it's the beginning of a wide range of services that enrich life. So while Apple Pay and Google Pay were looking at payment or digital payment as a means to close the loop on the consumer transaction cycle. So they were trying to close the loop by making that experience better. The payment experience was possibly the only thing in that entire cycle they thought did not meet up to the technological advancement. And hence, they looked at digital payment as a means to close the loop. Now, WeChat and Alipay, both of them looked at this as creating a new ecosystem, building or opening up a new loop, right? They were not looking at it as a closure. They were looking at it as a new growth phase, right? So that is where that's a key uh, difference in the way these three companies or four companies worked. Now, the next factor that we look at is technology, right? We've all seen this QR code. It's omnipresent in China. If you've been to China in the last 3, 4 years, you will see this humble QR code everywhere, right? It's just out there. Every vendor, everywhere you go in the market, you see these stacks of QR codes that are there. So much so that even beggars have their own QR code, right? I'm not joking. There are really people walking around with QR codes and begging on the streets of Shanghai and Guangzhou, right? Uh, that's that's how omnipresent or prevalent this QR code has become. To me, that again is a critical success factor in the way, in contributing to the success of these two companies. If you go back to Apple and Google, they embraced the RFID technology, right? They invested in the RFID technology, which was fine. But what it meant was it created a costly adoption process for the merchants. They had to install new POS machines which would accept or which had the RFID technology to accept payments from the phones. Consumers also had to upgrade their phones to ensure that they had the RFID technology. So everywhere it was creating new business, new ancillary business as Apple always does. Um, but it was not really the best experience that one could have thought of. Alipay and WeChat engineers, on the other hand, went around the country, saw everybody had a phone with a camera and everybody could access internet. They just needed to plug that gap and say, well, how can we use that? And that's how the QR code came into existence, or QR code was kind of used to get these people to adopt digital payment. Now, for the merchant, the cost of adoption was practically zero. In the early days, all they needed was one A4 printout of that QR code, big enough so people could see it. And then, of course, you had these slapper boards and plastic boards and all of that coming in. But if you look at it, it's just one A4 printout that they needed to immediately become digitally payable or receivable, right? And the consumers, whatever phone they had, as long as they had internet and the camera, they could simply point at the QR code and go on with the transaction. This kind of drove adoption at lightning speed, right? In 2 years' time, by 2016, almost 30 million vendors were onboarded at WeChat Pay, which is 70% of the total vendor population in China, right? So that's the kind of adoption rate that we were looking at. The third factor that we're looking at is culture, right? Now, when we say culture, basically there is a low resistance to people using technology. And that's kind of unique to China at this time and this place, right? It's something that is similar with I mean you would have found this in the US if you were in the 50s and 60s when the race to space was a big game, right? I mean, everybody wanted to be a scientist. Everybody wanted to talk about science. There was technology innovations. There was just booming in the US at that point. So much so you even had a final countdown song, uh, which talks about the flight to Venus. So that kind of buzz is possibly now available or seen in China, right? Everybody out there is on the phone. The picture that you are seeing is, of course, the famous Pokemon uncle. So who had strung about 23 phones on his cycle and went around collecting Pokemon coins, points, whatever, right? Um, so the cultural emphasis, agreed, is partially government sponsored, but also brought about by the internet companies and the changes that people could actually see. People could see their lives were getting better with the phones. They're bringing in new capabilities. They're leading to a cultural upwelling of digital that is kind of penetrated in every corner. Today, again, if you go to China, you will see uh, old people on their phones using apps. Uh, they're somehow trying to kind of compete with their kids and their grandkids, I guess. But there is an adoption by all generations towards mobile phones, right? And the last and possibly the biggest factor uh, that contributed to the success of these two companies, the ecosystem experience, or what I would say, the merchant experience versus the consumer experience. Now, we all know Steve Jobs and Apple's obsession with the customer, right? And thank God for that. I mean, otherwise you wouldn't have had an iPhone in your hands today, or an Android, or whatever else, whatever smartphone that you're having. Thanks to him. Um, but this was also kind of the problem why Apple Pay and Google Pay kind of failed, right, in driving adoption. Um, Apple Pay assumed that consumers would jump on to their bandwagon simply because they were introducing it, right? And they started to monetize this from day one. Uh, Look, near field technology is extremely quick. We all understand that. And consumers can possibly use their biometrics and fingerprints or iris to validate a transaction. So you can reduce fraud. But for the average US consumer, paying with Apple Pay only saved a few seconds during the in-store transaction. So if you look at it, today credit cards also come with readable chips, RFID chips. So whether you use your phone or your credit card to tap the POS machine, it didn't make a difference. And people were so used to taking out their credit cards when they complete a purchase, because it's been, again, like I said, it's been ingrained in them for the last 30 years to pull out a card, just like in this part of the world we would pull out cash. It just said, I mean, they just continued using the credit card, which also had the RFID technology. Now, that is on the consumer. On the merchant side, um, Apple started charging banks and issuers about 0.15% of transaction fee on top of the regular credit card processing fees, right? So your cost of transaction for a merchant was anywhere between 3.15% to 4%. And there was very little incentive to adopt this new technology, because you also had to buy a new POS machine. You also had to get internet, and everything that came along with this solution, right? And it was easily a setback of about 2,000 to 3,000 US just to set up and get Apple Pay ready, um, which, again, not counting for training and the other upgrades that you would need every year or every couple of years. So it just didn't feel right for the merchant to adopt to this new technology, or to the new payment channel. They were all happy with where they were. Uh, Now, contrast that with what Alipay and WeChat Pay did, specifically Alipay, right? Uh, they charged 0.6% transaction fee, which is half the credit card processing fee, right? Cost of adoption for merchants was very low. Like I said, it's an A4 size printout that you need to put on your storefront, right? Again, if you don't have an A4, that's fine. You could even do a smaller size. So all you needed to do was print a QR code and kind of display it on your storefront. That was the only cost for the merchant. There was no purchase of point of sale machines, right? There was no training. There was no software upgrades. There was nothing, right? In which was what kind of led them to both Alipay and WeChat Pay. They managed to conquer about 70% of merchants within the first 3 years, which was uh, which was a staggering rate of adoption compared to what Apple Pay was doing in the US. Right now, the best part is yet to come. Right, so now you have consumer data that is sitting uh, on your app. Now, what can you do with it? So Alipay and WeChat Pay started sharing insights with merchants for free, right? They did not charge the merchants for access to data. That helped the merchants do their campaigns better, and um, they kind of ramped up their inventory and sales, bringing in greater ROI, right? They didn't stop with that. Now, Alipay and WeChat Pay again, they had a bunch of people sitting on their app who were using their app, who were paying vendors and transacting on their app. And they figured out that there is a part of this population that would not be eligible for credit cards from a traditional bank, loans from a traditional bank, right? Uh, Wealth investment options, advisory services. There were a lot of things that were kind of out for a certain part of this population. They started offering that, and that was actually the birth of Ant Financial, right? The uh, Ant Group was formed on the basis of this, and they started developing or creating a credit rating for each of those consumers or customers on their platform, uh, that would kind of then drive the acceptance or issuance of loans, cards, advisory services, cross-selling, upselling, all of that. So the data to them built a lot more than just transaction fees. So they looked at long term. They looked at it with a strategic viewpoint. They I mean, they said okay to the transaction fees, but the um, uh, the longer term play of using that data and deriving more value to both the consumer and the merchant was more relevant to them, right? Today, if you look at it, Ant Group, they coming out, they're in the midst of an IPO. The valuation is at 313 billion dollars. It was about $75 billion in 2016. So all of this kind of contributed to what I mean, contributed to the success of these two companies, right? Um, just as a takeaway, right? Um, there were two key strategic drivers for the successful platform adoption. One was to create value for all the property parties, which Alibaba and WeChat Pay did very well, not so much by Apple. Monetize the ecosystem, not just the product. Again, Apple did marginally well on both, but Alibaba and Alipay and WeChat Pay mastered both of these, right? So if you guys are startup founders or entrepreneurs out there, keep that in mind. All right, how are we doing so far? If you can just go back and give me a shout out in terms of how we're doing. All right, that's encouraging. Okay, I think I will take that, right? So, okay, there's still some votes coming in. Um, all right, so let's move on, right? So, thank you for that feedback. And let's keep going. Now, the third section of this talks about mini apps or mini programs. Like I said, apps is a bad word to be used in this context because Apple claimed copyright to that. So, mini programs. What are mini programs? To understand that, let's again try and get that out of your this thing, right? So, let me ask a couple of questions here. Okay. Before that, we have some questions. Okay. All right. We'll keep those questions coming. We will look at it at the end of the session, right? And you can always, like I said, vote for these questions if you want to see them answered today. All right. So again, there are two questions waiting for you in the next uh, survey. How many apps do you have on your phone today? I think I have over 460 apps running into 4 pages. The 4% that have less than 20 apps, I don't believe you guys. Okay, so now of these apps, how many do you use on a daily basis? There we go. So you use possibly 10 apps on a daily basis. There's some people who use 15 apps. I'm just waiting to see if there are more votes coming in. Okay, let's just see if there are more votes coming here. Okay. Okay, again, the point of this was we all download apps for possibly a single transaction, right? Say, for example, DocuSign or EverSign or any of these signing documents. You may have received it to sign a document. You sign a document and then you possibly don't use it again. But it's there on your phone, occupying space, occupying memory, basically taking up screen space on your phone as well and pushing possibly useful phones on your second page. Imagine a world where you have one or two apps on your screen, on your phone screen, and everything else that is transactional is inside those apps. That is what the power a mini app ecosystem can do for you, right? Again, this is something that originated in China with Alipay and WeChat Pay, and they have been so successful. Between them, they have 1 million restaurants, 40,000 supermarkets and convenience stores, 1 million taxis, and 300 hospitals that are available on their ecosystems, right? WeChat in this space is a leader. In fact, they've been using these mini programs to kind of eat into Alipay's share of the market. Now, like the founder Alan Zhang says, the app doesn't need to be downloaded or installed to be used, right? These are they reside within the WeChat app or the Alipay app. It's an ecosystem within them. Paytm in India is now building that because it got kicked out of Google, right? Out of the Google Play Store, right? Google, they had a difference of opinion in terms of providing payment services to some betting companies. So Paytm is out of Google Play Store. They're building their own ecosystem. Now, what is a mini app or mini program, right? It's an app within an app. It's lightweight. Most of these apps are less than 100 KB, right? So it's instant. Uh, you don't need to download merchant apps individually. You don't need to download a Comfort Delgro app or a Grab app or a Uber app. I mean, I have five or six of them on my phone because I also travel. So I have Uber, Lyft, all of these on my phone, which I don't really use regularly, right? But they're all sitting there and taking up battery, taking up space. Uh, I don't know what else they're taking up in the background as well, right? Um, so these apps sit inside WeChat or Alipay and they seamlessly integrate with the mother app, right? And they're simple, easy to create, easy to add and delete. And they, again, these are integrated to your digital wallets and bank accounts. They just make it so easy to transact and clear up the clutter on your phone. Uh, Again, if you are a WeChat Pay customer, uh, it's very easy to onboard for these apps, right? All you have to do is self-enroll through the WeChat app, and then sellers can start accepting digital payments. So when you self-enroll, you need to link your bank account to the WeChat, I mean to the app, which then gives the seller an ability to do a basic due diligence from that bank account, right? So it's again safe for the merchants to do this, to use this, right? Uh, Again, here, I mean, you guys have to hand it to these two guys, right? So in terms of transaction fees, anybody who puts an app within the mini program ecosystem of WeChat Pay or Alipay, if they don't meet a certain threshold of transaction volume in a month, the transaction fees are actually refunded by Alipay and WeChat Pay to the merchant. I mean, this has to be a first anywhere, right? How many companies refund commission because the merchant has, I mean, they've not been able to help the merchant achieve their monthly threshold. This is this is where uh, both these companies have gone out and they've bent over backwards to get the merchant community in their fold, right? Uh, if the threshold, I mean, if they do meet the threshold, then their transaction fee is again not more than 1%. It's between 0.6% and 1% of the transaction value. So small businesses, your neighborhood florist or your hawker or your food court vendor or your your wet market vendor, all of these can get on without any hassle, right? And increase their reach and their business. So I think that's where the difference was in terms of where these guys are today. Again, to kind of summarize these two companies and the success that they've been having in this in this world, uh, five things that I would say are key to them, right? Uh, Develop a compelling value proposition, not just offering one or two services, but a wide range of services to both customers and merchants, right? And again, continually widening and deepening that digital ecosystem access through the payments wallet. Like I said at the beginning, both these companies thought of this opportunity as an opportunity to create a new ecosystem, not to close a loop in the transaction cycle. Second thing, reduce onboarding frictions, right? Again, by enabling self-enrollment of both customers and merchants, increasing the level of know your customer standards, only when it became necessary, right? When you're dealing in $2, $3 transactions, you really don't need a KYC. Don't bring in KYC everywhere, right? Yes, if you're dealing with $100,000 or $10,000 on a daily basis, yes, you need KYC. You need to know the source of funds. You need to know what is happening. But if you're dealing in $2, $3, just leave it, right? Reduce that onboarding frictions that are there. Again, using that QR code, so anybody could just go live at any point in time. Again, that's the transaction friction that I'm talking about. QR codes and highly responsive interfaces. All you need is a phone and a internet connection if you're a consumer, and all you need is a A4 size paper if you're a merchant. So do that. Loyalty rewards. Build a good loyalty program that will ensure that there is a long-term play for your customers. Again, long-term and holistic view of profitability. Don't look at tactical opportunities to make money. Transaction fee is a tactical opportunity. Look at the strategic view of having access to data and insights that will help you build a better ecosystem, introduce new products, and also take a, a, again a longer view or an innovative view to the whole thing, right? I think we're doing okay on time. We still have another 5-10 minutes before we start the Q&A. Let me come to the final section of this, where we discuss the benefits, risks, and issues of a cashless society. Again, when I say cashless, we're talking of contactless, right? We're not going back to the barter system in my sense when we say cashless here. So let's look at the benefits first of a cashless society. Low crime, right? I mean, you really don't need to carry a pocket full of cash, which again I think is a famous song or a poem. You don't need a pocket full of cash when you're dealing with digital payments. Sorry. Um, So once the money is taken from your wallet physically, there is no way you can track that cash or you can say it is yours, right? Because every note is the same, every coin is the same. The person who took it out could claim that to be his or hers. In fact, a study by American and German researchers found that crime rate in Missouri, in the state of Missouri, dropped by 10% when the state replaced cash welfare with electronic cards, right? So cash is always risky in that sense and bulky as well. Uh, Similarly, you have automatic trails created. So your financial crimes should also dry up, right? Illegal transactions, gambling, what we call in India as hawala, the second economy, all of these typically transactions that use cash to avoid recording a transaction, uh, all these would dry up, right? They may still exist in their own ways. I'm sure those people would have figured out ways to circumvent this system as well. But in general, you will see a decrease in all of these. Cash management is costly, right? Today, the US dollar that is printed is not worth the paper that it's printed on. I mean, a $1 note, the paper is costlier than than that $1 value, right? Uh, and it's difficult and also hard to store cash. I mean, businesses need to store money. You need to have a cash register, and then you need to transport that to the bank. All of this is costly. I mean, I'm not saying it's expensive, but there is a cost that can be attributed to all this, which will eat into your profits and your revenue as well, right? So it's convenient to go digital. That's the other benefit that you have. Cross-border payments. Obviously, when we travel, we go to money changer, we exchange. I mean, if you travel to Jakarta, like I used to do every time, $100 would give you a nice big fat load of bills, right? Which you struggle to carry in your pocket. It's just again convenience when you have when you have merchants across a few borders accepting digital payments, right? So that's definitely a convenience. All right. So we look at risks and issues in the last section here, right? Now, data privacy and hacking. Just like cash is not, and this is a big concern, right? Electronic payments are not as private as cash payments. We talked about automatic trails that are being created. Now, if you're not somebody who trusts the organization that handle your data, you might have nothing to hide, but it's just that it's the feeling that somebody is tracking you, somebody knows what you're doing, and the more information you have floating around online, the more it is more likely it is that it will fall into the wrong hands, right? But cash allows you to spend money and receive funds anonymously. This is, I guess, to me, data privacy is no longer a risk. There are at least 4,800 websites that are compromised every month. So it is an issue that needs addressing quickly. Similarly with hackers, right? Hackers are nothing but bank robbers and muggers of the electronic world. In a cashless society, you're more exposed to hackers. If you're targeted and somebody drains your account, there is no alternative way to spend money. Even if you're protected by law in some countries, some of these deposit insurances and whatever, but there is really, it's really inconvenient to restore the financial standing after a breach. And once you lose your phone, and if your wallet is integrated with your bank account and you're all seamlessly set up, uh, you might as well say goodbye to all your money, right? There is definitely that risk when you go digital. Financial exclusion. Again, like I said, there are a lot of old people in the rural areas. In fact, 46% of northern China's rural population and 63% of India don't really have internet bandwidth to promote mobile payments. 73% of the world don't even have a bank account. So these are people who depend on cash, who rely on cash. In India, there is the daily wage system where every day you get paid, and those are cash payments, right? So there is an issue of financial exclusion that's also a real issue, right? Again, trust. People feel good when they touch money, when they touch notes, when they touch coins, when they like that coins jingling in their pockets. There is that gives a sense of confidence, that gives a sense of trust. When it's digital payments, unless you're really a millennial or yet to be born, you're just seeing numbers, and some of you may not be comfortable with just numbers moving here and there, right? So that's another issue. Transaction cost. I think very early in the presentation we talked about EcoCash, where the transaction fees are as high as 40 to 50%. I think the average transaction fee there is 46%. Imagine if I were to buy a bottle of water that costs $1 and I have to pay 46 cents to get that. It just doesn't make sense, right? And EcoCash, if you want to convert the digital money into hard currency, you're looking at getting 50 to 65 cents to the dollar. So that's how crazy the transaction fees are. I'm not saying the rest of the world is, but they could be definitely people who might look to make a quick buck by increasing transaction fees. The last thing is the negative interest rates, right? Uh, Again, with all the cash that is not going to be there, you're paying for storage. Banks will start charging negative interest rates. In fact, countries like Denmark, Japan, and Switzerland have already experimented with negative interest rates. Uh, Again, the negative interest rates would reduce the bank profitability, and hence it could be passed on to customers like you and me, right? Uh, so, so how cashless can or not, right? My take is, again, when we say cashless, we need to be clear that we're talking about contactless payments and not barter system, right? Uh, my guess is digital payments are here to stay. There is no two ways about it. Whether they become the only source of payment is the question. I personally believe that there has to be a balance of convenience, right? Trust and standardization. You still need the central banks to be relevant, uphold that authority over the currency that gives trust to people. But you also need the giants like AT&T, Apple, Google to help the consumers by easing the pain, right? By using technology which can only complement or support it, right? So, in summary, I think digital payments are here to stay. We just need to be aware of the risks and issues that are there that come with it, and hopefully, we should be able to keep the central banks relevant in that. Okay. Now, before we move on to the Q&A, I just want to check one last time on how did we do, right? And then after this, we will move to the Q&A. Okay, 181 participants, of which I guess Florence and Claudine would also be there. So that gives me about 179 participants. Uh, 33 of you, 34 of you have answered. I have a ticker there in case you guys didn't notice. Uh, okay, I guess in the interest of time, I will take that as a good session. Let's look at the Q&A, right? Um, let me just So, how secure are these cashless or contactless payment apps? In the event of misuse like fraud, how protected are the consumers? That is the top question, and let me take that. Um, Look, every digital technology is prone to risk, right? Uh, Now, one of the things that both Alipay and WeChat Pay have, again, I'm speaking only to these because the research has been on that. Uh, they, in terms of a fraud or a fraudulent payment, uh, they have agreed to refund if the case is proven in your favor, right? So there is a guarantee of refund of the amount that would be as if there is a fraudulent payment detected. Now, in terms of technology, uh, yes, everybody does ensure that their app or their platform is secure. But then there are hackers also who are trying to make them insecure. Uh, so it's a tough question to I mean kind of answer one way or the other, right? But I would say the security is pretty high, the bar is pretty high, and they're getting better, right? um, which system is more secure, RFID or QR code? um, Again, an interesting question, right? So QR code, the data travels through internet. RFID code is a paired device. I would say RFID is more secure, but again, uh, that's if yeah, I would say the RFID is more secure. Do you feel that there is an adoption lag in SG for contactless payment? Cash is still used a great deal. Are you aware of any significant initiatives here? Um, yes, cash is still king here. Mobile payments have not caught up. But again, I think it's the culture. We'll feel comfortable with our plasticky notes. Are there any significant initiatives? Yes. The government is looking at an e-commerce version 4.0, e-retail version 4.0, where there is a lot of seamless integrations that are being proposed, right? Uh, in terms of both consumer experience and the entire transaction, uh, visually and transactionally, there is a lot that is being planned or being discussed. I think we can expect a lot more initiatives to come out in the next few years. Uh, what is your opinion on national security if MAS is to outsource the clearing function to third parties such as ANT Group? I would not. I wouldn't advise that, right? So I'm again, however, however secure these are, uh, putting an entire nation's clearing function into a third party is is still fraught with a lot of risk. Um, I would. Uh, I wouldn't go for it, but I'm sure there could be other answers to that. Facebook's Libra will work. Um, I don't know, dude. I mean, I really I don't know. I mean, they've been talking about it for a long time. I'm not sure on that. All right, let me just scroll down and see if there are further questions. Oops. Okay, I had a few comments on confi polls testing for sales. So, 20%. Okay, I think there's just one question that I might take. Could low US adoption be also down to the traditionally fragmented banking? Uh, yes, lots of banks at state level, no national integration. It's community-based banking. Uh, that could be a reason as well. But yeah, I mean that could also be a contributing factor. I would agree. With the growing market, WeChat, Alipay, Afterpay, FavePay, do you see a new crypto or a consolidated currency ecosystem coming about to replace this? Yes, sir. Yes, ma'am. Um, the Chinese government is seriously, I mean, they are seriously looking at bringing out a digital currency, right? The CBDC, Chinese banking digital currency. When that comes in, there is bound to be a hit for these third-party payment providers, right? Because then you can just exchange the digital currency directly with who you want without needing a WeChat or an Alipay or anybody else. So, uh, and there are a couple of other countries as well looking at it. But my guess is China is possibly way ahead in that as well. If mega apps like WeChat and Grab are given banking licenses and are offering consumer services with high adoption, will the company be too big to fail? Uh, I mean, why would you think that? No company too big has failed just because it's too big, right? Um, when you have a company that can take care of your front end and back end, uh, then you stay within that ecosystem. It's there's a high chance that you you could fail because of complacency, but in terms of in terms of consumer experience and the whole transaction flow, if everything is within one ecosystem, I, I I don't know how you can really fail. What are your thoughts about the recent news of DBS getting into cryptocurrency exchange? Um, I'm sorry, I'm not aware of this. I will have to skip that. Are they looking to set up a currency exchange? Okay. I'm not aware of this. Sorry. My bad. All right. I think we're about there. We've kind of reached a saturation point on the Q&A. Florence, did you want to do a closing or?
Yep. Thank you so much, Gautam.
Thank you.
I will stop your sharing now.
Yeah.
Okay, so I hope everybody found that as useful as I did. It was very insightful. So we thank Gautam once again for sharing your insights. We've come to the end of today's session. Please keep connected with us on our website or social media platforms. And if you have any questions after this, please drop us an email. We'll also be sharing the deck of slides and the recording with participants who need them. With that, I thank you for your attendance and I hope to see you at our next session. Thank you very much and good afternoon.
Thank you all.
Thank
See
you
you.
all.